Good afternoon, guys. Yesterday, Tesla dropped significantly all the way down to $247. And today, we are up about 2%. I just closed out my January calls for a 100% return. The $27,000 you see here net liquid, basically, I had $60,000 worth of calls and I sold half. So this entire position was a profit. But I'm looking to re-enter with calls for February. So we're going to talk about why I closed the Januaries and why I'm rolling them to February. We're going to go over my price target for February as well. And we're going to go over a post yesterday that I put out and got 47,000 views. So it seems like a lot of people really want to hear about it, but it's going over the last time we had this exact setup on Tesla versus what's happening now. And what happened last time was Tesla ran 83% within 90 days. And the crazy thing is it actually pulled back 10%, which could be happening right now in the same exact manner. So we have a lot to go over in this video, and it is the afternoon. I don't know how well the algorithm is going to push this out to the daily watchers, but I hope you guys get this, and I will be doing a nighttime update. But let's go through yesterday. Let's just talk about what happened. We were sitting up around this level, pushing up into highs, and then we had this major pullback. The first thing I want you to understand is that within the analysis that I give here on this channel, and especially over on X, which if you guys aren't following me, please go follow. These are longer term analysis. When I'm trading January calls, which I bought last month, I believe, I'm planning on holding that position for at least a month. So I'm not worried about what happens tomorrow. The 4% pullback that happened yesterday, I actually made money on puts like intraday, but it sucks to say I gave some profits back on that position because when it was up here, I was up 175%. But I closed half of that position out on this initial rally just so that I could see if Tesla just goes through and runs right through 260. I wanted to make sure that I did have a position because I didn't want to be stuck where I closed all of my position out, hoping to time the market, and Tesla just blew the roof off and ran to $300. I wouldn't want to be sitting there saying, man, I really should have been holding at least half of my calls. But as we saw this pullback yesterday, we only pulled back to the 11 SMA, which is a very tight, simple moving average. We did retrace significantly, but now we've bounced and we're holding around $250. The reason I closed my January calls was just because I was number one up a lot. They were far out of the money because when I purchased Tesla was down around like $230. So they were about $12 out of the money because I bought a 240 strike. What I'm looking to do is still play this upside on Tesla, but I don't want to be constrained by the theta decay of an options contract that expires within a month. If I were to push this contract out till February or March, it will help me sleep at night a lot better. Even though it's not a lot of money relative to my account, I still don't want to be unnecessarily paying theta decay to the person who wrote me the calls. Now, somebody asked earlier on X, what would my optimal entry be? My optimal re-entry for Tesla would be a pull down to $240. And then from there, a massive rally all the way back up, which brings me to the post that I put out on X the other day, talking about what happened last time we saw this setup. And before we move into this replay, I just want you to understand that obviously past performance in history does not indicate anything about what will happen in the future. There were a lot of things happening economically that could be different now. There were a lot of things happening fundamentally with the company that could be happening now. So we're not saying that this is definitely going to happen, but it is quite a coincidence that it's setting up in the same exact manner. So the way that we had this set up was this descending trend line where we are making lower highs. And this is basically from February 2021, where we peaked out, down to about July 27th of 2021. Once again, we had a tight squeeze, just like we had over the past couple of weeks. And then as we watch this play out, boom, we get this big push up on Tesla. So this, for a lot of people, would be the time to buy for this breakout. This is how our chart actually looked. You can see here, this is from December. I just posted this. So this right here is almost the same exact setup. And then what ends up happening? We want to see this pullback and a test. So basically, boom, Tesla looks going to break out just like what's happening right now. And then we pulled back 10%. So think of how many people got spooked out of this potential rally. Now, for me on this bounce, that's my time to buy. But now we've bounced and held this level of support. So what I would be doing is looking to set a stop loss here on a lower low, and then just let this bad boy ride the trend. From here, we just let this play out, and you can see that we just continue to rally. We're using the 11 and the 50 SMA, which is a very easy indicator to use and what most of my trading bots are based off of. And boom, As we get this massive breakout. So now, if you wanted to be safe here, which is what I definitely would be doing at this moment because we've deviated so far from the 50 SMA, and we're going into earnings, is I would be closing at least half of my position. I actually just closed all of it. We'll re-enter again with 800. And now what we'll do is just let this thing fully play out. We'll see if we can really get a massive rally, which boom, look what happens. And at the end of the day, we could say to ourselves, oh, I really wish that I could have held my entire position, but there was no need to. So then we'll come through and we will actually sell 400 of the 800 shares that we have. So we're still in, we still have, which I think obviously Tesla's probably going to pull back. But if we want to see this thing continue to rally, we still have some skin in the game, which boom, continues to happen. I didn't think that was going to actually happen. And then we get this pullback and the break of that 11 SMA would have been our time to flatten. When this happened last time, we had that 10% pullback followed by an 80% rally within just 78 days. And as you can see here, as of Thursday, December 21st, 2023, we're setting up in the same way. Now, will Tesla just rocket back up? Potentially. I think that we could see that as long as we hold this 11 SMA. If not, we'll probably end up pulling back down to 238. So what I'm probably going to do right now is open up my calls for February, but with half of my position. So about $10,000 to $15,000 worth of February monthly calls at the money. I'll probably do maybe I'll do 260. And then from there, we'll see what ends up happening. We'll see if this continues to rally. If not, and it pulls back to 240, then I'll average down with my other half. I hope this video helped, guys. Thanks for all the support. I'll do a full analysis on the market, Tesla, and everything else later on tonight. As always, thank you for all of your support. I'll see you next time. Peace.